All right, traders, this is Blake Morrow, and you are listening to the Daily Roundup webinar. I hope everybody's having a great session. And man, it is beyond choppy out there in the markets. Let's start off. I actually want to look at crude, obviously, for obvious reasons, which we're going to get into that in a bit. But let's start off with some of the euro, like the euro first and foremost. And I'm going to take you over just to an hourly. So I think the hourly is probably good for now. Excuse me. You look at the euro dollar, we had that little false breakout on the upside. Then, we've been consolidating in a very, very whippy fashion. You can see we're just kind of whipping back and forth here in the euro dollar. Cable, very similar situation. We dipped to support, and then, here we are just, back up towards, I want to say the highs, but, just kind of bouncing around. The Aussie, I had a short on it a little bit earlier. I got out around 90 as it squeezed higher, and I'm like, I'm going to get out of it. But then, here we are. We're coming back down again. I don't want to get excited about the Aussie till we break out of like this range. You can see maybe a slightly ascending wedge. Kiwi, similar ascending wedge that we have going on. Something that looks probably like this. Maybe even like this. Something like that. And it's just, the fact of the matter is just the market is extremely choppy. And then you have the dollar Canadian too, which is, in what I would consider a triangle type of formation. So that brings us to really the asset class that's moving so much and that everybody's got their eyes on today, and that's crude. So let me pull up the continuous contract that a lot of people are, on social media especially, are really looking at. And you got crude, dipping towards $8. Now remember, this is the front month contract, the one that expires tomorrow. If you're looking for crude to trade off of, and like, let's say you're trading a correlation with a currency like maybe the Norway, the Norwegian krona, or maybe the Canadian. It's important that you're not looking at that. You're looking at the June contract, which will be the M contract, which is June, right? And you'll see that crude's just really not doing anything. The reason why the front month contract is going up, because there's people don't want to take delivery. They got to sell. They got to get out of their the front month, and it has no relationship to the June contract right now. Right now, do I think that crude's going to drop regarding like the June contract? Do I think that you're going to see prices converge a little bit? It might. I think what happens with crude from here is more of a product of, if you're looking for global growth and demand, you're going to see it here. And obviously you could use crude prices to help identify what you're going to do in, like, let's say the S&P or maybe the Canadian dollar or whatnot. I wouldn't be surprised to see crude slide a little bit. I wouldn't be surprised to see us, maybe push back towards, $22 a barrel. Here, you can see this is the bottom contract that I'm referencing right here. I wouldn't be surprised to see it slide a little further. But if you're thinking, oh, well, crude's dropping below 20 and it's heading to 10, I think you're going to be mistaken at this stage in the game. Again, we got to move forward and look ahead and not look so much at the current month contract that you're seeing. And even if you look at the continuous, like the CFD that I think this is Oanda's CFD, they repriced everything at 18. And if you look at like the previous move here, we're breaking into slight new lows. And I think, crude June contracts, to see them below 20 wouldn't be too surprising to me, but it's not like and you can see that crude looks like we're making a move towards 11 on this continuous contract that we've been referencing. But it's not like we're, currently trading down there now. Sorry about the dogs, guys. My pool cleaning guide, the weekly pool cleaning guy, is here. So it's, if you hear my dogs, that's the whole reason why they bark whenever they see them. And it's just the way it is. Okay, so I just wanted to make sure I talked about crude and what you're seeing here, so you're not getting too terribly excited about. Everybody's like, oh, crude's at 8 and crude's at, look at the June contract and try to make your decisions from there. Um, like if you're out there trading the Canadian, like I actually think the dollar Canadian is at risk of going higher because crude prices continue to slide. And I think a lot of people are out, and this is something we were talking about in the chat room. I think a lot of people are trying to figure out how they can play this contango, and they're probably out there buying crude, but I actually think the risk is still lower at this stage. Which would mean that the dollar Canadian probably bounces and maybe challenges 141. But what I would be looking at regarding the technically regarding the pair is just making sure that it stays above this 140.30 level, and if it does break above like 141.15, 140, which is the 618 retracement. And by the way, when I talk about these fib levels, that low was late in the day on Friday, so I was referencing this low right here. Okay. The 618 retracement comes in about 141.15, so I wouldn't get excited about any type of upside move with the dollar Canadian until we're back above the 141.20, 141.25, something like that. And again, I want to go back and talk about the Aussie, because I want to talk about how important these levels are. And we're obviously near that 64 cent level in the Aussie dollar. One of the reasons why the Aussie is so bullish right now is because equities, if you look at equities aren't selling off. They're still holding up. So if you match like the S&P here, and you match it with the Aussie dollar, okay, you'll notice that they're pretty strongly correlated. Stocks bounce, Aussie's back 63.80. So in order for the Aussie to really come down, you're going to have to see equities roll over. And if you've been watching equities and you've been watching Aussie, sure doesn't feel like it's going down. But what we are doing is we're starting to find some resistance in the Aussie up at 64 cents. We're also starting to find some resistance in the stock market around that around that 2900 level. So what I'm going to be looking for moving forward is I'm going to see how equities respond down here if we get down there like 2800, 2750, and then that's going to cue me in what I should be doing with the Aussie dollar. And versus me just trying to, again, I was trying to short the Aussie. Excuse me. I think I was short at 71. I closed it at 90, and I'm just like, just irritated, and one of the irritations that I'm feeling is that equities just are kind of stuck where they're at. So you kind of got to let the market duke it out here and try not to be, too worked up with what's happening, and let the stock market figure out where we're going to go, and then trade currencies in some sort of correlation. Like in for this example, I'd be shorting the Aussie if we broke down, and if we obviously break through these highs, then you got to think the Aussie is going to break back above 64 cents and maybe even higher. We'll probably head back towards 60, 65, 66 cents, which would be up here, about this resistance up here. So, I think anything can happen from here, anything. So, try not to get too excited about what you think is going to happen. Let the market drive your decision making. I know it's tough sometimes, but man, this is a time where you're going to end up getting chopped up. If so, Alan says the same deal for the Kiwi dollar, I guess too. Yeah, Alan, I think so. And one of the reasons why the Kiwi is outperforming the Aussie right now is simply because of the Aussie New Zealand. You see the Aussie New Zealand's coming down today, but yeah, I mean, same thing. Look, if equities continue to break out, then we're probably going to get above this 50% retracement in the Kiwi, and probably trade back up towards the 618 retracement up here, or, whatever that is, 62.50. And the flip side is if equities do roll over, then you've got some support to play off of in the Kiwi, probably down below 60 cents or something. So I know it's tough, and it's believe me, it's very frustrating, especially when you sit in front of a computer all day. You're like, I need to do something. I want to do something. I need to make some money. Blah blah blah. I should be compensated for the time that I'm sitting here. But patience is definitely the game right now, because it is a very, very frustratingly volatile market. And I think there's not a lot of interest in currencies at this moment. Not saying there won't be, because there definitely will be. But because liquidity is so poor and everybody's at a stalemate with equities, we're at a stalemate in currencies. So there's just not a lot of interest at current level. So if you take 10 or 15 pips, you see it, take it. If you're out of the money 10 pips and you're like, man, this isn't working out, take that off the table so you don't put yourself in a bad situation. I think that's the way to play until we have better direction with in the currency market. One last thing I want to mention to you guys, if you haven't signed up for the Online Traders Summit, okay, this is next Wednesday. So you have 8 days. Make sure you register if you haven't done so already. It's easy. I just did it on my mobile phone because I was testing it. So, just put in name, email. Make sure you put the correct email too, because you want to make sure you get the links sent to you. So don't put in some fake email, because then you're not really registered, right? So it's a really great lineup, great set of speakers, and it's free, which is awesome. So make sure you take advantage of that. And for those of you that are listening in a little bit late and you're not listening to us live, which isn't those of you that are listening right at this very moment with me as I'm speaking, make sure you sign up for ForexAnalytix. It's $1 for 10 days. Try it out. And then this way you can listen to these webinars live. You can, use the premium version for the next 10 days. And then you can download the mobile apps, all that fun stuff. So guys and gals, thank you so much for tuning in today. And, good luck. Jason asked, hey, thoughts on the Euro Aussie and the Euro New Zealand really quick. I was looking at the Euro Aussie earlier, and we're near support. This is obviously very, very key support for the Euro Aussie, but man, this Aussie is so damn strong. I'm a little, nervous about trying to pick it up down here. I think, if you want to play it on the long side, this is the place to do it, but it is a little nerve-wracking that it's not really lifting a lot. And I think one of the reasons why is obviously equity. So, and then the Euro New Zealand is going to be very similar. All right. We are near a lot of support, but if equities continue higher, then these are probably going to break down. So that's something to take into consideration and think about, as we move forward. All right. Good luck, guys. Thanks for tuning in. My name is Blake Morrow, and I'll see you tomorrow morning on the webinar. Thanks.